What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I'm the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we are kicking off earnings season with a host of names that should be on your radar if you're looking to make some moves. I'm waiting for a few of you to trickle on in here, and we're gonna go ahead and hit the ground running. Now, there's a couple of things I want to show you before I get elbow deep into this. First of all, if you're not already on the distribution list, livetrader@zax.com. You'll get the emails when these Monday things are kicking off. That's first and foremost. So livetrader@zax.com. Got a ton of you actually that hit me up last week, so thanks for that. Hopefully you got this email and it found you well. Sometimes it might end up in a spam folder or a trash folder, something like that. So just double check that if you didn't get it and you feel like you should have been signed up already. So there's that. The other thing I want to show you is, or just let you guys know, there's a small delay between when I'm talking and when you guys hear it. So if you say something in the chat and I don't address it right away, you know, there's some delay. Also, feel free to go ahead and throw out your ideas. Lots of feedback here. This is an interactive type video, so don't be shy. Tajesh is the only one that bites. The rest of us don't. And you know, go ahead and throw your comments in the comments section. Feel free. And even if you're watching this later, go ahead and throw them in there, because I try and circle back with you folks and answer any questions that you might have. So here we go. Tajesh, how you doing? Aaron, happy Monday, my friend. I got roasted over the weekend, and my belly is just torched, man. I went to the beach twice, and it was not kind to me. I had SPF 50, but my girlfriend made fun of me because I kind of rubbed just like right around my belly button, so that's like white. But then I didn't get the sides as well, I suppose. So I am good and roasted. Lorraine, how you doing? Welcome. Before I dig into this again, elbow deep, I want to show you something. PJ, how you doing? Tracy, welcome. I want to show you with this trading view, and again, this is not a paid product placement, but just something I've been doing. I've been trying out some new strategies here, some new day trading strategies, which are cool, which I'll share with you folks a little bit later. But even in their free, you know, you sign up, you just kind of give them your details. You'll get delayed data, or I think you get the BATS data. Joanna, how you doing? Welcome. Thank you for welcoming me back. We were here last week, but that's all right. Thanks. So in here you get this. You get some cool stuff. Okay, so if you go to TradingView and then you enter, you know, you get into the detailed, what they call the detailed chart view. Then you get this, and you get this cool thing where you could run a screener, and you can do your own custom filters on it, which is super cool. And then, but what I really like is you got paper trading, so you can buy and sell just like normal. You can do that from the chart trading, and you kind of buy it, right? And you'll mess around with it a little bit, but here you can paper trade, which I like. They also have like a journal that shows you what you bought and everything, account history, notifications. But here you can even add notes. So you can add a new note, you know, kind of type in what you were thinking at the time and everything. So this is something cool I think you should check out. For those of you looking for a decent, you know, paper trading, this is just, paper trading is practice, right? And as my basketball coach used to say, practice makes permanent. So if you practice well, you're going to play well. So if you have your strict rules and your trading plan that you are adhering to in your practice trading, hopefully that will spill on over to real life. So what I tell people is, when you are going to paper trade, act as if it's real money, okay? Take on the same risk that you would as if it was real money. Don't add unnecessary risk that you wouldn't add on otherwise, right? So I just threw these in there just so you all could see. And there you go. Okay, so that's enough about that. What we're really going to talk about today, man, that Valero looks good, though. Whew. What we're really going to talk about today is this earnings season and what we've got coming up. So, Netflix, after the bell today. So, I think I liked our little format that we got into last week. Again, this is new, right? We've never done it this way before with this Monday kickoff and targeting session, but I like it. Also, I do have a hard stop on this at 11:40 Central, 12:40 Eastern. So mid-sentence, I'm going to have to cut out and run. But hopefully I'll time it properly so we'll get through this. So I'll try and keep a decent pace. We're going to go ahead and kick things off here like we did in our older videos, where first let's look at this price consensus and EPS surprise chart that we have on Zacks. Get a decent idea for what some of these expectations might be heading into earnings season. So here on Netflix, black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrows are earnings misses. Highlight a couple of those. The multicolored lines represent the evolution of our Zacks consensus estimates over time. Now, remember, the Zacks consensus estimates are not a bunch of us over here at Zacks thinking, that we know something about the market. This is all of the analysts that are out there covering the stock. We aggregate all their data and then give you that consensus number. That's what the Zacks rank is based on. It's not us at Zacks making these. It's what other analysts are doing. So if you notice here with Netflix, there's been this sort of trough that's happening, 2017 into 2018. Oh, to Jesh, I promised my girlfriend I'd drop her off at work. So quarter mile away from work, by the way, which is spectacular. It gives me an excuse to start at my car because I work from home, so I never go anywhere. So I can start off a car, drop her off, let the car warm up a little bit, bring it back. So that's why. Anyway, so we got this nice little trough, 2017, up into 2018. So I like that. And if you look and you see, oh, there he is, Freak. How you doing, man? I was looking for you in the in the chat room. And if you guys aren't already in the chat, it's scrolling across the bottom of the screen. This discord.gg/little p big BWCM little SG. You can come hang out with us in Discord. But we'll talk later, Freak. So here you go, this nice little trough upside action that we've seen on EPS estimates for Netflix. That's pretty good. Look at this on these 2018 numbers. Not only the healthy up and tick to the upside, but look at the growth. So the gaps between these lines represent growth. So you've got solid growth in these estimates. And pretty significant. If you look at this 2017 number at the end of the year, now this left y-axis, like I said before, does correspond with the EPS. So this is about, what, 125 that you're seeing? And these recent estimates now here for 2018 are up over 25. Hola, Jerry. How you doing, man? So more than doubled the EPS estimate, as the stock is more than doubled. So just a quick little snap judgment looking at Netflix from the Zacks perspective. Yes, the stock is doubled, but as long as that those earnings estimates have doubled, that means the PE has remained relatively in line. But now the question is going to be the growth, right? Is that growth going to be there the next year? And the next year, is there enough of it in order to justify that PE ratio? So, yes, 2018 is good, but that means 2019 we're going to need to see something out of you, Netflix. So overall, a very bullish, I think, price consensus and EPS surprise chart here on Netflix. In on the chart, Now, we've had a spat of volatility here in the markets. It's been choppy. It's like, you know, one time you got something good, and the next day you got something bad. And the market's been chopping around. As for Netflix, I think probably playing off of this fib is going to be your best bet. So what do I mean by that? Digging into these fibs. So let's do this. Oh, Jerry, I'm glad you're practicing your Spanish. Are you headed to Mexico or something? Vacation? Is it vacation time? Look at how this fib actually worked in kind of nicely. So you got the retracement from this December to March move. And look at how this 38.2 came into play here. Supported it. So that's nice. And then now you're kind of in this in-between land, right? We're kind of stuck trying to figure something out here, right? Not getting a lot of positive momentum, but just kind of chopping in the middle here. Actually, I have to get my I don't want autosave on. No. Oh my goodness. A couple of quirks about this thing. Why are they autosaving my thing? Oh. Let's go back to, I like to have moving averages on my stock analysis charts, on my kind of daily analysis charts. Okay. South Texas, huh? I went to Texas once. I went to Austin. I liked it. I liked it. As they say, Austin's weird. I wasn't in love with Austin, but I liked it. I had fun. Good times. All right, so look at Netflix. You've got the 50-day moving average. This is really the only one that's coming into play here. $50 days at 294 right now. Stock's up at 308. So you gotta figure out this like sort of 300-ish area. It's got to be some action. I can almost guarantee the 300 prints, you know, tomorrow. These guys are reporting after the bell today, right? So let's see what the market is expecting. I suppose we can look at the detailed estimates page. What's up with this? All right, we're gonna do something else here. We'll let this load up. I want to go to Austin for the F1 race. I'm not going to be able to make it this year, though. Got a lot of stuff going on. I'm headed out to Napa Valley on Friday. Let me tell you, the flight from Fort Lauderdale to San Francisco, 6.5 hours. Headed out there. I'm not looking forward to that. And then I get to hop on a shuttle for an hour and a half. That's a trek. That is a trek. So, still, I mean, when you're trying to time this growth, Netflix is still looking for almost 40% revenue growth this quarter. Almost 40% revenue growth next quarter. Current year numbers still 35.87. Next year, 23% growth. So, as far as the numbers are concerned on the revenue side, still some decent growth out of Netflix. If you look at the EPS side of things, also relatively bullish here. Actually, it's very bullish. 57% revenue or EPS growth rather for the current quarter. Next quarter, they're gonna quadruple, right? Because 100% would be double, 200% would be triple, 300% is actually quadruple. So more than quadruple their EPS growth, their EPS year over year. But when you're coming from such a low number, that doesn't mean as much. Overall, get a little bit more than double up for the current year. Next year looks like 50%. But here's what should aid the bulls, is that just over the last week, you have an analyst that has increased their estimate for the current quarter, next quarter, 2 for the current year, 2 for next year. So That is a bullish sign there. Bullish moves here. Bullish moves. Overall effect on our consensus hasn't been much, though. We've gone from 55 cents to 63 cents. Next quarter, 52 up to 65. Current year, 231 to 274. And next year, 391 to 425. So again, here, I'm just going to make quick little notes, and then we're going to go back and kind of revisit these. So on Netflix, overall, we've got, well, do I want to look at the options? No, we're gonna detail the options when we decide which of these 5 we really want to go in on. So Netflix, EPS story bullish, and I would say supporting previous move, but will growth wane, I suppose. That's what I would say. That's what I would say of this. Okay. When 2 analysts increase last 7 days, is it also counted in the last 30-day section? Yes, it is, because the last 7 days is part of the last 30 days, as well as the last 60 days. Now, as a little caveat to that, just sometimes the data on the website will look wrong, okay? So you'll have a scenario where you have like 3 in the last 7 days, 2 in the last 30, and then 1, right? It'll be upside down. It's never supposed to look like that. Whenever you see that, I know it sounds stupid, but it's just that particular page is displaying it wrong. I know. It doesn't happen all that often. It is rare, but every once in a while I do see that, so just want to let you guys know about that, okay? So that's Netflix. Then I wanted to look at Lam Research. LRCX. So, you know, semiconductor manufacturing, pretty much. Yeah, that's right. I'll probably see a bunch of fire damage and all sorts of stuff. So where's their price consensus? And what is this? Price and... No, give me the price consensus. Did they just flip on me? How did that even happen? Okay, let's skip... What's going on here? Charts, price consensus, EPS surprise chart. Load that up. Thank you very much, Zax. All right, now, pretty monumental here. Again, huge ramp up in price, but that huge ramp up in price has been met with a huge ramp up in EPS. That's pretty astonishing to see. $4 down here. $8, so basically you've doubled from 2013 into late 2016. You double, and then you double again in the last year and a half. And look at how this EPS just keeps creeping up with it. And also, find me a red arrow. No red arrows. So you're talking 20 quarters in a row of beats. That's a pretty good stretch. The other thing that I'm liking about this lamb chart, you know what lamb charts makes me think of? Lamb chops, and not playing along. I'm hungry. That's all. I know it's lunchtime. It's getting to be lunchtime. I'm thinking about lamb chops. So I got an Instapot, right? I don't know if you guys know about this, but it seems pretty spectacular. It's like a crock pot slash pressure cooker slash rice cooker slash... I'm very excited. One of the recipes I looked at, lamb chops. So look for this, the divergence between the stock price and EPS estimates. I see those as opportunities. Also, this entire industry, so LRCX, Micron, you could throw NVIDIA, whatever you want to throw. Yeah, exactly, where kids come to play along. Don't start that, dude, because it's a song that never ends. So don't start singing the song that never... I'm not going to start singing the song that never ends because it'll just keep on going. Anyway, so 2018, see these nice little EPS estimates to the upside. And now you have this divergence where the stock has come down and those EPS estimates have stayed up. And again, lots of volatility within the whole industry. And if we can pull this up too... you see that situation happening. Now look at this. This top starts to come in at 220. You really get the bad flush down in early February below that 200-day moving average. Then it pops up above. Right now it's still above the 50-day moving average. So I like that. Might be a decent idea to get back to the highs. So I'm going to throw this out there, LRCX. Maybe gets back to highs. Divergence with PNC chart. Okay, and when I say PNC chart, I don't mean the bank. I mean the pricing consensus. Okay. All right. So now let's look at Nucor. Now, I have Nucor in Surprise Trader. Just added it. In case any of you are ZU members. Stacks rank number 2 buy right now. So, Freak, I like the shop idea. You know, the shop thing is a Citron idea. It's kind of Amazon. It was like a if Trump continues, you know, the negativity with Amazon, then that should benefit. I think that's what they were talking about. Check out Citron Research, it's the big short hedge fund, which is surprising. Most of the time they're short, but they find good ideas for the long side too. So there you go. Anyway, here we're looking at Nucor, obviously choppy. We talked about steel imports. So during these periods of negativity, you get a lot of downside here. And now to the upside, there's been a lot of volatility in their EPS estimates. So not a smooth sort of trend, right? At all. And look at the choppiness in the stock, just kind of all over the place, right? Let's look at the chart real quick. So they've come down to the 200-day moving average, found some support. So this is a decent thing that you can look for, not just in Nucor, but in any stock, okay? Find something that has kind of been in a range, locked in a range. Here it's even better because you were in a lower trading range, rallied up through that level, retreated to test the bottom, retreated again to test the bottom, okay? So you have these bottoms that are put in. And then it's a low, it's a lower sort of risk versus reward to come in and buy a stock when it's at the bottom of its trading range. Heading into a report, hopefully you'll have some bullishness in front of this. And there you go. So Freak, I like Nucor for other reasons too. I mean, it's part of it. It showed up on our Surprise Trader screen, so that's why it's on here. So there's a variety of other things that made it bullish for me. So let me throw this in here too. On the Nucor notes, bouncing off 200-day / bottom of trading range. Okay, so could come up with an idea around that also. Then looking at Skechers, so some of the retailers have really done well here. Urban Outfitters, I know, has been on a pretty good run. And it's just, I guess it was the death of retail was almost a little bit overblown here. And then now the stocks have come back. Using the price consensus and EPS surprise chart, we can see if the bounce back is for any real reason. Zach's rank number 2 buy tells me that it could be. Now on this price consensus and EPS surprise chart, you can see how Skechers kind of got a little ahead of itself in that run up in mid 2015. Little ahead of itself, came crashing down as these estimates came tumbling. Estimates come tumbling down. Things don't look so good. But here, the company seems to have regained its footing It's earnings beginning to trough. But again, got to ask yourself, this sort of acceleration to the upside as these estimates have kind of crept upwards, but is it ahead of itself? Has it gotten ahead of itself again with this recent rally? Are the expectations now too high here for Skechers? Now looking here from a purely technical perspective, today you're breaking out potentially. Let's see, 42.73. That's the area to keep an eye on today. They're reporting. What are these guys reporting? Let's see. The 19th after the market closes. So that's Thursday after the bell. Skechers. You don't typically see breakouts ahead of earnings. So I would expect this to maybe reel in just a little bit. Like reel itself in. Ahead of that, ahead of the report, I just don't, typically they don't break out ahead of the report. Okay, so if it does, I'm not going to say I'd be shocked, but I would be surprised a little bit and it would be a good sign. It would be a sign that, well, depending on if it's on heavy volume or not. So you got to see if it breaks out on volume. That tells you that that resistance level was not as significant as we thought. And that, there's other areas. Now remember, this is in this gap. So it's still, stock is still filling in this gap down. So here we have 45 basically. So 45 is really where that gap came in. After earnings, maybe the stock would like to gap up there. So on Skechers, kind of snap judgment is, does it fill the gap to 45? It's a question to have in your head. And then Schlumberger. So oil services. The market has come back quite a bit. These oil stocks. Now, how do I keep getting this? Why does this keep happening to me? Just my lucky day. We keep getting sort of stuck to the surprise chart, and it doesn't have everything I want on it. All right, here we go. So you see the estimates come crashing down. Not a surprise throughout 2014 and 2015, early 2016, and even here, it's kind of hanging up. Right? It's trying to make the turn, but it hasn't yet made the turn. Okay? And you really need that turn in earnings to have a high probability. So what we're looking for here is earnings. Now, earnings trends take a long time to develop. Price trends change on a dime. Just at the drop of a hat. Price could be up one day, down the next. But these earnings trends are really entrenched. Takes them a while. So they've yet to turn around at Schlumberger, but they're starting to kind of bottom out. So the trend is your friend until it ends, but when there's no real trend, all you've got is risk. You're not really sure what's going to happen here. And then on the technical chart, perfect example of why death crosses are silly, and golden crosses are silly too. Because check this out. Here's your golden cross, basically called the top. This is actually a death cross, and this is almost near the bottom, so it's not supposed to be that way, right? Your golden cross is supposed to mark the start of a huge move to the upside, not where the stock comes tumbling down. So you got to be careful with those. They don't always work. Works here, right? As you get this trend sort of developing, and then it breaks down. But just because it happens and it tells you from a technical perspective, doesn't mean things are turning around. Now, I will tell you, one of the greatest things you can use is if you have something turning around on earnings and you see the clear earnings trough, and then you go back to your technical chart and you see something like that, then you're onto something, okay? Then you're definitely onto something, and that stock could be turning around. But earnings is going to trump anything you see on the technicals. That's been my experience. Earnings is kind of king. In the short term, the technicals could take over, but overall, the earnings are going to push that down. Okay, so it's good because this gives you a bias. The earnings can give you a bias, and then your technicals could give you the signal, and that's a good kind of 1-2 punch. As for Schlumberger here, I'm taking a pass. SLB, lack of trend, risk of reversal. I'll pass. Okay, that's just kind of my quick notes here as we're going along. Now, let's come up with some trade ideas here, okay? I think maybe my favorite of this is going to be looking at Lam Research. I think that may be the opportunity. Of course, it could be speaking too soon. Whatever, we'll see. You know, we've got reports of everybody warning about these chip slowdowns and all this stuff. And I don't know that that's going to show up right now. I don't believe that it is yet. So I think we should do a deeper dive on LRCX. Netflix does look good too, but there's really some risk in here. There's bigger risk in Netflix than I think is in LRCX. But let's look at this. So let's pull this up. The first of the chips to report, you know, you can find that from Earnings Whispers. So I like using them for their calendars. We have a calendar at Zacks, yes, but I like using Earnings Whispers. Okay, it's nice and quick to look through. So what I typically do is just kind of look through here. Let's see who's tomorrow morning. So we've got, you know, I guess of the significant ones. When does AMAT report? Isn't that next week? No, it's the next month even. We've got a whole month before AMAT goes. So anyway. Back to the task at hand, Hefe. So I've got 7 minutes with you guys. Let's look at Lam Research. Change from the stacked view to the side-by-side. Now, let's go a month out, too, just so you have a little bit of time. Well, no, first, wait, hang on. See, I'm rusty. I'm rusty here. I forgot how I used to do this. 204.50, so let's call that the 205. This is going to give us a decent idea of what the market is expecting as a direct result of this earnings report. Okay. 205s are going 510 by 570. We're going to call that 540. The 205 puts are 720 by 790. So we're going to call that 755. So basically looking for $13 or 6% move out of the stock. So $13 on LRCX. 200-day is at 198. That's a little bit more than that. And then we said this upside is really 234. So I think it could move a lot more than what these guys are thinking. So how about this? You take a look at that May expiration. And I know some of you are going to want to mess around in this, you know, right there. If this is my thing. If you want to mess around in that front week, I think you're better off selling put spreads down under this 200-day if you can get any love down there. Or if you want to be very bullish and strong on it, you can sell them just south of the 50-day, south of 200, south of 195. The other thing is, when you're looking at a stock like this is reporting after the bell tomorrow. So put the trade on if you're going to be short. If you're going to do a credit spread, put the trade on tomorrow. Don't do it today. It's another day of risk, right? Because the applied volatility is still going to be in here. Let's change from side by side to the stack view. See what kind of opportunities there are out near this 200 level. See, this doesn't look too bad. So I can short a 200 197.50 put spread. Sell the $200 put, I'm going to get 510. If I go ahead and buy the 197.50 put in order to give myself downside protection, so there's not unlimited risk for me, right? That's going to cost me $420. So 90 cents is a net credit. Difference in the strike prices is $250 minus that 90 cents is $160. So I can make 90 on 160 or 56%. And all I need is shares of Lam Research to close at or above 200 at expiration. Yes, that is kind of aggressive with the stock here at 203. But I do like, we already had kind of a bullish, I had kind of a bullish spin on this overall. You do have the 50-day providing some support. That's a more aggressive trade, no question. So let me put this on here really quickly. Let's get back to our risk spectrum. We're going to call this a 3-star risk, maybe even a 4-star risk. 4-star risk is short the April 20th 200 197.50 put spread for a 90-cent net credit. Okay. You can be more conservative by pushing that put spread further out. Your reward is also going to leave you a little bit, because if you go all the way down to 190, it does lower the risk since it's further out of the money. So this reward is going to change. How's the reward going to change? You're going to sell the 190, you'll have 195. Simultaneously buying the 185. Oh, yeah, this is way out of whack, right? 130. So you're only going to make 65 cents on this. But remember, the difference in the strike prices is $5. So you have $4.35 at risk. So 65 on $4.35. So you can make 15%, but there's a lot of downside risk if Lam Research has a bad report and collapses under that 190 level. So what you got to ask yourself, something like that, is, you know, could Lam really break down below these lows on this report? That would take a pretty bearish report to do so. But that risk versus reward on that particular trade, I don't think is worth it. Okay. Now, for those of you looking for a little post earnings drift on this, I'm thinking Lam could drift up over, I mean, really, it could drift over 220 very easily. If not going all the way to 235. Remember, the market's price again about $13, so that's 217-ish. So if we get halfway between this 202.50, really, the market's up here at 217. So we've done this little half before. So you can come down to 210 and 202.50. So this would be a long call spread. Going long the 202.50 for 12.40. Simultaneously selling the 210 for 9.10. That's $330 at risk. Difference in the strike prices here is $750 minus that $330 means you can make $420 on $330 or 127%. and you would need shares of Lam Research to close at or above 210 at expiration. So that's a more aggressive trade as well, but you have a little bit of time because of that expiration. So another 4-star risk. I know they both are, but this is long. The May, what's even the May date here? May 25th. 202.50, 210 call spread for a 330 net debit. All right, folks, so those are a couple ideas that I have here just on LRCX. If you have other ideas, of course, feel free to shoot those in the comment section. Let me know what you guys are looking at for the week. You'll be able to catch us over there in the Discord chat. Then, as always, if you're not already hooked up on our distribution list, live trader at Zacks.com. And like I said, I had to be out of here at 11:40. It is, in fact, 11:41, so I went like a minute over. I promise you I'm not going to be rushing you guys in the future. Yes, Freak, the show is officially back. We're doing it on Mondays, every Monday. Although next Monday I don't know if I'm going to be able to do it because I'm going to be in San Francisco on Monday. I will have my laptop. I'm going to see if I can still put something together. If not, we'll just have to do it on Tuesday. Okay? But I will keep you guys in a loop. I will let you know. And I'm out. Thanks, guys.